What's going on, everyone? This is Charles Moon with Prosper Trading Academy, and I wanted to point out a name that is really loved by retail and Wall Street alike. It's actually a name that has a ton of weakness as of late, but has really been on a nice trend. Home Depot. Now, you could see just a few days back, it rejected at this teal blue line. I want to point out what this teal blue line is. It is that 200-day simple moving average, a key technical level widely watched in the streets. The last time Home Depot was at this level was May 29th, May 31st, and June 3rd. From this point, the initial run-up went from around $188 to around $210. But the overall effect is that it went from this range and progressively pushed near the to the 52-week high at 239.31, or near that 240 mark. And so you can see it's a fast slide. It's been a fast slide from 239 down to right around 211. And since this 211.77 low, we have only moved up, and we are currently trading at 217.59. So why is this important? One, respectfully, there was a lot of money coming in at those lows at a point of interest. And when we reference a point of interest, it means that it's a technical level or a price level that you would suspect a lot of eyes to have some sort of attraction or attention to. And then if you're looking, and in this retrospect, we were looking for support, meaning the stock price to stop moving lower and potentially deflect in the other direction, which would be up. When we see this take place, we actually are only confirming what we speculated that possibly could happen, which is a technical bounce. And so when I see a technical bounce, meaning a move off the lows or a deflection off the lows, I immediately think bullish. Why bullish? If you're unsure what bullish means, it means that there could be proactive movement for the stock price higher, or continuous movement in the stock price higher. And because of that, if you're a buyer, if you're an investor, that's exactly what you want. You want bullish behavior, bullish trading activity. And one way that you could potentially speculate reversals or where a stock price will stop moving lower is to utilize key technical indicators such as the 200-day simple moving average. So I would highly encourage you folks not to just be purely reliant on this, but to definitely have it up on your actual trading platform on your daily chart, where each bar or each candle that you look at will be representative of a full trading day. This reaction at price is very telling, because if you were able to recognize this, you would have gotten in, let's say, at the worst case scenario, around 213, you'd already be profitable in a short period of time to the 217 price. Now, there's nothing to say where it could possibly go, but usually the laws of attraction is that it'll make a run towards their old resistance point, and that was right around 223.45. So in this instance, there is a potential for short-term gains. It looks like around 10 points to the upside very quickly. And if you're able to spot these opportunities in big moving stocks such as HD, it's a great approach for the short-term and even the intermediate-term players in the markets. Now, as an investor, I wouldn't say respectfully use this tool to start your investment. But more than anything, use this tool as an assessment on your investment, because when stocks tend to get below, they tend to get pretty weak and extend on that weakness. It's like a short-term sign for bearish traders to get highly active. So something you want to be attentive of, something that you want to be aware of, both the investor and the short-term, intermediate-term trader. And I hope moving forward, this causes a very big positive in terms of influence on your actual assessment and your trading. Now, I do want to mention that stock and stock options trading does involve substantial risk and may not be suitable for all investors. Past performance is not necessarily indicative of future results. Ladies and gentlemen, take care and good luck with HD.